I really want to echo this big need for customers to demonstrate a return on investment. You know, they're going through these long, laborious processes for compliance purposes, but they also have to obtain insurance. So the ability to implement all these controls, evidence all these controls, maintain a very robust R2 certification, and then know that you're actually getting a return on your investment out in the insurance market.
Hi, everyone. Welcome to another episode of Trust Versus. I'm Jeremy Hubel, Innovation Officer with HITRUST.
Hey, Jeremy. I'm Robert Booker, Strategy Officer at HITRUST, the global leader in cybersecurity assurance. You know, Jeremy, with the significant investments companies are making in cybersecurity, information security practices, you know, we're all operating still in an environment with incredibly active threats, attackers constantly trying to get in and compromise companies' environments, which kind of leads me to this concept of you can't do it all. So now this notion of residual risk is a really important consideration, especially in the online world we all live in.
Yeah, and I think about sort of just the traditional risk management ethos of, all right, there's only so many things I could do with a risk once I acknowledge it. I can mitigate it, like I can establish controls in my environment to reduce that risk down to a level that I care about. I can accept the risk. Look, the risk is out there, we're going to live with it. I can transfer that risk to someone else. So if that risk does come to fruition and I have some adverse event, I can be compensated. And that's where insurance comes in. And that's what we'll be talking about today.
I think, you know, as a recovering security leader, a CISO for a large company, this concept of cyber insurance was, until probably 5-6 years ago, was really on the edge of the space that I managed day to day. I was always thinking about how do we make the system stronger and, you know, mitigate those risks like you described and try to avoid to the degree possible an adverse effect. But then, you know, things keep happening and it became increasingly important that the security leaders, the CISO, and the people in the company that are responsible for the risk to the company's, you know, financial position, usually the treasurer or the corporate risk officer, depending upon how the company is organized. You know, there's people that think about that more, that solvency of the company and the financial risk and the liquidity challenges that companies face. You know, it became just an increasingly important part of the role in communicating the company's maturity and really managing the overall risk, as you described so well. It's an important part of a holistic or a program.
And I think the growth in cybersecurity insurance as a market is sort of an acknowledgement from society that cybersecurity incidents can be a going concern risk for a lot of companies, meaning a breach or a major IT security incident could take down a company, like cease to exist. And we've seen it time and time again, not only in the healthcare space, but in general. And so organizations looking for some way to transfer this risk, some way to say, look, you know, if we get that bad day, someone is available to help bail us out. So Robert, how hard is it to get cyber insurance right now? How does that work?
Yeah, it's not impossible, but it's not necessarily easy, at least in my experience, Jeremy. And, you know, again, it's sort of, I think 5-6 years ago, maybe longer, when I started looking at this part of the problem, you know, it really was, you know, meeting with underwriters. And these are very significant companies. They're associated with syndicates like Lloyd's of London, you know, a name that most people have heard of in the insurance industry for literally centuries of time. And you're talking to people and they have a cyber expert somewhere on the team. And, you know, they're kind of saying, describe your program. And you tell them, well, we do this and we care about this. And this is the stuff we focus on. And, you know, it was kind of a credibility thing. You know, you tell them you've thought about the things. They're like, yep, that seems credible. That seems right. And then literally every single year we'd go through the process of renewal. We'd have another discussion. Then we would have teams of different underwriters come to us. Sometimes they would engage with us together. Sometimes we would have a dozen meetings, one after the other, having the same questions asked and answered and the same conversation. And you could kind of learn over time which underwriters were dealing with having losses and claims because they were talking about it in a very active way and the threat environment being very challenging versus people that said, well, this is sort of something to worry about. So I think that process of communication, the executive leadership that a security team have to have, and the credibility you have to build has been an important part of that. So not impossible, but really an important part of the role in communicating the stature of your company. Where I think we are now is, that's becoming more and more systemic. It's being designed and optimized. There are now applications that are literally dozens of pages long that ask all kinds of questions, ask for sensitive evidence of your systems and how you protect your firewalls, your remote access policies, your multi-factor authentication, end-user device protection, all the things that we know as security leaders are important. But it's not always consistent. You might be working with one broker and they ask a series of questions a certain way, but an underwriter that they are working with says, well, we also want some other things. So it's still almost a negotiation each time, but I'd say year over year, it gets better. It's kind of that collaboration. You have mid-market companies that really, they are suffering potentially ransomware attacks or attempted ransomware attacks. They need to make a claim or seek some assistance through their policy. But they're kind of the down market people. They aren't as sophisticated as to have a dozen meetings with people. They just want to fill out an application, have them do a credit check on me, and I get insured because my risk level is a certain way. And I don't think we're quite there yet, but I think we're approaching that point. So it's really harder for the smaller and mid market companies to go through the process. As claims have happened, the rates are very dynamic. What I paid 3 years ago might be very different than what I'm paying now. There was a huge spike in rates, I recall, 3 to 5 years ago. I think that's stabilized a little bit. It's coming down. And in the back of all of that, I think companies, especially companies that aren't experienced, might have this thought in the back of their mind, okay, I'm paying potentially tens of thousands or possibly hundreds of thousands of dollars for a large coverage policy with a very large deductible or retainer. And if I have a claim, does it even pay? Like, am I going to be able to rely on this insurance? Like, how do I know that I've actually fulfilled the obligations that they expected me to fulfill? Is there going to be some claim that I said I did something that proved to not be in place and I got attacked? And what I've learned, I think, is that the insurance industry does not want that. They do not want customers that are not sure they can believe in the product and rely on the product. So they're really trying to make it better and more streamlined and valuable. And I think it's an evolving market.
I've never shopped for a cybersecurity insurance. With car insurance, you've got decades of actuarial data. So they could say, all right, Robert is of this age in this zip code driving this kind of car. He does or doesn't have kids. His marital status is X. And therefore, we know your risk. We can quantify it down to the penny, and they know what to charge you, and they know how much risk we're taking on. But with cybersecurity insurance, there's just not enough data out there yet for them to be able to say, I know exactly how much risk I'm taking on. So yeah, it's a very new, relatively new industry, and it's changing. It's volatile. Robert, can you talk a bit about what HITRUST is doing in this space?
HITRUST has had aspirations to look at this problem for many years now. We've talked to various underwriters and brokers about creating some approach to make cyber insurance easier to achieve, especially for companies that are very mature. And it's always kind of been a single company with an approach to, this is how we want to underwrite, and this is the form we want to fill out. And so while it was a interesting conversation and valuable, it didn't really have the dynamics of changing the market, changing the opportunity for the people that HITRUST serves in a way that could really sort of make it just markedly better. A specialty broker, a company called McGill, they approached us and said, this is a problem. And we've heard people tell us that HITRUST is really very mature at helping organizations demonstrate their security maturity. And we think we could do better as an insurance industry. They provided the other half of the expertise we needed to get started on this problem. We knew how to help organizations measure very mature security programs, select the relevant controls, make sure the assurances are reliable and provable. We knew all that. We've done that for years with great success. We didn't quite know how to package it fully for the insurance industry to understand, and that's where McGill came in. And so the first thing they said is, you can't do this with a single underwriter. You've got to do it with a syndicate, organizations like Lloyd's that allow many underwriters to share a risk for a customer when the customer wants to buy a very large book of insurance for a loss, cyber being a certain category of loss. They introduced us, and we collaborated on the problem with the insurance market. And it was McGill that brought Trium to the table.
Yeah, and so the takeaway for listeners is HITRUST takes a lot of effort to prepare the certification and assessment, especially the R2. If you have an R2 HITRUST assessment, you qualify potentially for lower cybersecurity rates, and your HITRUST assessment is an input into that underwriting and application process. So there's a European YouTuber that I watch called Tom Scott, and Tom Scott is a science YouTuber and has got all these really interesting YouTube episodes. And there's one that I remember to this day. The title is "I Promise This Episode About Microwaves is Interesting." Well, I promise this interview about insurance is interesting. If you've ever shopped for cybersecurity insurance, do take a listen and let's get into it.
Well, Josh, Michael, Sidney, good morning, good afternoon. So excited to have this conversation with all of you. The challenges we're facing in the industry around cyber insurance, and really great to come together with all of you and have this conversation and maybe learn a little bit more about what we're all facing together and the opportunities we all have to make things better. So why don't I ask each of you to just introduce yourselves?
My name's Josh Ladeau. I'm the CEO for Trium Cyber. I've been in the industry now, specifically in cyber insurance for in excess of 16 years. So feeling pretty old within the industry. It is fairly new, at least as insurance goes. Over that time, really seen the evolution of this market, and it's helped me become very excited about what we're doing here and sort of this marriage of insurance and assurance, because we have a lot of challenges over the last decade that we're trying to solve for. One of those is sort of the accuracy of data inflow for underwriting and sort of the overall process.
Hi, everyone. I'm Sidney Prasse. I work for McGill and Partners, which is a boutique reinsurance and insurance broker. I specialize in cyber risk on that team.
Mike Giuliano, partner on the cyber risk team here at McGill. So excited for the chat today, Robert. Thank you for having us.
Yeah, it's my pleasure. And, one of the things that strikes me as we begin the conversation is I'm talking to two companies that, by what you've described, at least your specialty in the company, Josh, you with Trium Cyber, and Sidney and Mike with McGill as a specialty reinsurance and broker with an emphasis in cyber insurance. That seems somewhat unique to me. How do you kind of see the space, and why did you all think about specializing in the way that you have?
Certainly for us, we were the first monoline cyber syndicate in the market. And so that was a great opportunity to sort of bring that to bear. We've had great support from our backers at Pelican Ventures, and really seeing the opportunity that cyber is. From a growth perspective, there's nothing like that in insurance, right? It's a brand new market.
Yeah, Robert, I think the marketplace is ripe for new and creative ideas. I feel like I've seen so many insurance cycles. The cyber market landscape, as you can imagine, moves very quickly. And that was partly my draw to the industry. I think there's a lot of static approaches around kind of traditional property casualty insurance, where when we think about the cyber landscape with the introduction of AI and all of these different components around security, you're constantly learning, you're constantly challenged. An approach out there that we can all kind of support around making this a better, more sustainable market. And there's ways around focusing on that.
I think that's why we were drawn to Trium, and why we all, in our own respect, tried to find organizations that were thinking about the insurance process differently. There's more need in terms of innovation than cyber. With how quickly we're seeing the market change, it's important that the insurers that we partner with are agile to the claims that they're seeing, to how they ingest data, how they ingest the underwriting information. And I think for Sidney and I on the broking side, where we're interacting with our clients, we're trying to help them prepare for the marketing efforts that they go through in attaining cyber insurance coverage in the least, I guess, in ways that are the most frictionless on their teams. They're not doing duplicative work. They're taking exercises that they're already going through from an attestation standpoint, from a posture standpoint, and we're packaging that and giving it to the likes of Josh and Trium to take basically the best data that we have to come up with the best, most responsive policy. So best coverage, effective rates.
Think about insurance, right? We kind of know rain falls, wind blows. We understand those perils, and it's really about magnitude of those items. And certainly there's concerns about magnitude within cyber, but we don't know what's coming next, right? And the difference between cyber and really everything else is we're largely chasing sort of man-made behaviors, human behaviors, really what we're chasing and talking about, and this sort of escalation and changing nature, the vectors, the processes of attack and defense, all of those elements, right? It's changing in real time. And so I think the excitement really is around that. The entire landscape under our feet is constantly changing.
So just kind of widening the aperture, talking more about the broader state of the cyber insurance industry. You're all really at the heart of a lot of this work and a lot of the work that's happening. What are the trends you've seen emerge over the last years? What's kind of top of mind for the clients?
Yep, I think top of mind for clients would probably have to be controls. Not to steal Josh's thunder, but I think that is really what the insurance community is focusing on, specifically in cyber, is the adequacy and efficiency that your control is in place, how long it's in place. The threat landscape is moving really quickly. You need to kind of evolve your controls as that evolves as well.
We've talked about, I think the landscape is pretty consistently changing here. And so there's really two areas I'll touch on that I think are thematically important, right? So the first is really multi-factor authentication. You saw a rapid implementation sort of following some of the ransomware craze that hit kind of end of 2019 and into 2020. And interestingly, the questions were, do you have multi-factor authentication in place? And the cutting edge was, yes, we have that in place. And we've now the conversation has pretty quickly here moved to phishing resistant MFA, right? And the ability to circumvent the control of MFA by basically having a faulty prompt. And you're putting your data in and more or less informing the bad actors in the process of multi-factor authentication. I think the other thing that I would speak to is just the continuous migration from on-prem to cloud. And it's funny, as when those conversations first started maybe a decade ago, it was about that ultimate move over and the efficiency that would be gained in moving from on-prem to hybrid, or on-prem to cloud-based resources. And really what we've seen taking shape is there's just going to be this big mix of hybrid, right? There's probably for most entities not going to be a full shift over from on-prem to cloud-based resources. It's going to be some utility of both sides of that house, and really the difficulty in protecting two very different sort of environments when it comes to access control, et cetera.
So when you talk about those two areas, is that understanding really consistent across underwriters?
I think that's gotten better. I think applications have become more robust over time, but there's still tremendous variation. So, if there's 130 markets in the cyber industry, writing cyber or underwriting cyber, there's 130 different applications. There's 130 different policy forms. So there's very different ways of bringing the underwriters together and sort of aligning views. I would say it is still very different, although there are some key areas, like I mentioned, multi-factor authentication. Probably every underwriter is going to ask about that. But the level of detail around access controls, for instance, and how you manage access control, or how you might manage your training and awareness for a user base, right? The way we ask questions and think about the investments in those areas, I would say could be very, very different.
From my history when I was sitting in the CISO role, I remember those conversations where we were trying to sort of ascertain, how do we get to the superset of requirements and expectations that would best satisfy the risk, but also allow us to, gain the confidence of the companies that we wanted to partner with to, put together an insurance program. So Sidney and Michael, to you, I've heard several terms here that I know I've come to appreciate over the years, but maybe some of the listeners don't. What are the 2 or 3 or 4 stakeholders and structure around all of this that are terms that a security leader and a governance leader in an organization needs to be familiar with in order to have a good conversation about this challenge and what they need to do?
Our job as brokers, or at least what Sidney and I try to focus on, and why McGill is a bit unique, is getting through that first line and getting acquainted with the IT folks and the CISOs so they understand what we're going to potentially need to evidence to the insurance market, to the Joshes of the world, to the Triums of the world, and how best to package that information. Typically a carrier market, which is, think of your Chubb Travelers, your large property insurance companies that write all lines of business for a given risk. They're typically admitted insurance companies, meaning they're backed by the states. In the second layer of that, excess and surplus lines is separate from the admitted insurance marketplace and is typically where most of our listeners will be attaining their cyber insurance market, or in cyber insurance quotes. Now, what we're building is a little bit different. There is a marketplace that is known as Lloyd's of London, where all of the syndicate markets reside. And Lloyd's of London is typically a little bit more flexible in terms of building alternative risk transfer models, where we have not only some flexibility around tailoring coverage that we know is needed in the marketplace, but we also have the ability to build some additional capacity providers behind one standard insurance market.
The way that I would think about it is this. Syndicate, first of all, is just another word for insurer that sits at Lloyd's of London. So what we want to do is Trium acts as the Trium syndicate acts as an insurer, one insurer, and then you have other syndicates that we have relationships with and that we have described this sort of underwriting process and the nature of this relationship with HITRUST. And they like that idea. And so we said to them, hey, we've got a unique way of pulling data related to the R2 certifications, a sort of secure, non-public way to do that. We've got access to this great set of clientele who's gone through the HITRUST framework for R2. There's a bunch of compelling factors around this program that makes this pool of risk attractive. And so we say to these other insurers, hey, partner with us and share the exposure on these. So let's say it's us, and I'm just going to throw out a number, 4 other syndicates. So a total of 5 syndicates led by Trium. And we want to offer a policy of $10 million to a client. It would be those 5 insurers, including Trium, each take $2 million of the exposure. And when an insured has a loss, we each pay that loss equally from the ground up. So we would all say together, hey, we're each putting in $1 towards each $5 of loss, and we're putting that in at the same time. It is a way for us to take on risk together, and maybe a little bit more risk because of none of us are individually as exposed. And so we can write larger limits for more clients and perhaps expand the terms and conditions beyond what any individual insured would be willing to do if, let's say, they were on the hook for $10 or $15 million of limit by themselves. So it really creates greater stability, more optionality, perhaps better pricing.
This episode is sponsored by HITRUST Collaborate, which will take place October 1st through 3rd in Frisco, Texas. Collaborate is the conference for professionals focused on cybersecurity, IT risk management, and IT compliance. Join us to hear the latest on topics like AI assurance and cyber insurance, and to participate in thoughtful conversations about improving risk management in the face of increased cyber threats. If you like Trust Versus, Collaborate's a great chance to further your knowledge on the topics we cover in this podcast. Learn more at hightrustalliance.net.
It's nice to hear Josh talk about the HITRUST R2 assessment and sort of the confidence that's communicated through that HITRUST R2 certification. Thinking back on what I've heard and what I know about the insurance application process for cyber insurance, so much of it is based on a questionnaire and sort of a round of presenting facts about your security program, all based on a statement or questionnaire, an assertion verbally oftentimes, or just an entry in a Word document. And so we view questionnaires and inquiry as a low assurance avenue to communicate information. And in our world, HITRUST world, we say assurance is sort of synonymous with confidence. And so somebody can answer something and be like in their mind, completely truthful, not trying to deceive or anything, but maybe they don't have all the facts right. So like the level of assurance, confidence that you get from a questionnaire or just a verbal inquiry is low. It's just the nature of the way to communicate. But by looking at a HITRUST validated assessment, meaning an external assessor came in and really spent time to understand all the aspects of the controls included in the scope of the assessment, and to factor that external verification into the cyber world, cyber insurance world, is big. Like it's actually pivoting from low assurance to high assurance. And why does that matter? Well, you heard it in the interview. These underwriters and the brokers can really understand that, yes, they do have multi-factor in place. Yes, they do have good change control. Yes, they are actually treating cybersecurity seriously. And it's been proven, as opposed to just everyone thinks it's in place and that's what we heard. So for me, this is a very big shift. And I think this is the right direction for the cybersecurity insurance to go. It's very exciting to be part of it.
Yeah, well, I think it is the fact that it's proven that it's so critical, Jeremy. And something I said at the open is underwriters and brokers both do not want to have customers have a claim and then to recognize that they they are challenged to pay on that claim because the customer said, I had certain controls in place and the insurance was sold based upon the fact that those controls exist. But then unfortunately, it wasn't a complete representation. Maybe it wasn't informed, or in terrible cases, it might not even have been fully truthful. And now you have a horrible situation where the customer is already having a bad day, where now the insurance is saying, well, we just really can't pay on our promise because you didn't give us a full representation. So that confidence in knowing for certain that the controls are working and they're effective, and what you said are very important about third-party validation, the fact that an expert assessor has come in and checked and validated this is super important to really any relying party, but insurance especially, because they're going to pay a claim based upon the reliance they placed on your security system.
Let's get back into the interview and listen to the second half.
So if we look at the breaches over the last 2 or 3 years that have been viewed as having a huge market impact and social impact, the issue of third-party risk is front and center. I remember the SolarWinds compromise and others as well that I could name here, which are pieces of software and technology that are consumed by companies and, resulted in a lot of companies being victimized by attacks. So as you approach the area of, helping organizations look at their risk and their applications for coverage, how do you approach third-party risk specifically? And, what are the things you're having to think about there?
There's so much connectivity between each individual or each organization. There's a lot of reliance upon the cloud and different service providers to provide software technology. So there's this bucket around technology E&O that we can cover, which goes hand in hand oftentimes with cyber risk. Organizations that sell or offer cyber technology products. So if they're partnering with different organizations and offering their technology services. So that is a big exposure, but the ability to kind of reach beyond underwriting one entity and seeing all their connectivity and vendor relationships has proven very difficult on the underwriting side. We also have this notion of contingent business interruption too, which is more on the first party liability side. But I think those two things together are extremely difficult to underwrite to as we've become more connected.
So what we do is typically work with either the CISO team, business continuity teams, risk managers to help identify if they've gone through any crown jewel assessment exercises, to know who their critical suppliers are, who they rely most heavily on, whether it's from an operations standpoint or from a data aggregation standpoint. What we're trying to do is help the insurance market understand what an event within that third-party supply chain, what that impact ultimately looks like for our direct client, and how we can build appropriate limits, to Sidney's point, on that contingent business interruption, to help our clients adjust to a loss that ultimately is not it's not suffered at their hand. So I think we see that most commonly, honestly, in the healthcare space. I think there are critical vendors that are servicing large portions of the U.S. health system space. Whether we're working with health insurers, hospital systems, what we're trying to do again is help them understand, or help our insurers understand where that criticality is, and how we attain the appropriate limits and coverage to make sure that they're responding to an event that again is suffered at the hand of a vendor, but ultimately has a negative impact on our clients.
Thinking a minute about the underwriting process and specifically, the role that confidence and assurance plays for all of you as kind of custodians this process for the industry. When you are speaking to an organization and you're seeking to gain a level of transparency and awareness of how mature their security system really is, traditionally sort of questionnaires and responses and sort of challenging that has been the model I remember. But you've all stepped forward in the interest of transparency with HITRUST as well. Can you just talk about what brought you to that realization of the need for that, and how you've actually come to the decision you've made to work with HITRUST and to really look at this problem in a different way?
The underwriting process is something in this industry that has been really problematic. And it's from a few different views. One, as I mentioned earlier, right, all different types of applications may or may not have relevant questions within those. We collect this data. It's just written form. There's no structured data. So we don't get a good record of the controls associated with the given client. We don't know. It's blind. So that's one issue. Also, just sort of the inefficiency and insecurity of the underwriting process. So we get together with our potential policyholder partners. They fill out a giant 100-page application, and then they take that application with all the sensitive internal detail and send it to, 8 different brokers potentially, or, a set of brokers. And those brokers will send it on to other brokers, perhaps wholesale brokers. And these will all sit in files across the industry for a long time until somebody picks them up or whatever. So that whole inefficiency and insecurity in the process, the differentiated nature of each application that you see in the industry, really, those problems are all answered by this partnership with HITRUST. We've done a thorough review and are very familiar with HITRUST for quite a few years now, more than a decade. This is a robust framework that HITRUST employs. That's phenomenal. There's a consistency from one client to the next as we're receiving that data. We know what the baseline of controls are, and we know their performance relative to that. Isn't an insured or an applicant actually answering appropriately? Did they understand the question? And then when they answered it, one, did they purposely answer it incorrectly? Or if they believe they answered it correctly, but did not? Those are huge issues for the industry and really problematic on the back end in adjusting a claim and trying to understand what a client meant. The whole concept of third-party attestation is something this industry has desperately needed. The idea that, yes, I put these controls and somebody else has said, yes, you did actually put those controls in place. That third-party attestation element and the quality control process that HITRUST has implemented is really second to none.
From the client side, Mike and I have heard feedback from CISOs, risk managers, that the process was very laborious, redundant, static. So taking kind of that feedback and really finding a partnership with HITRUST in transforming that process. So moving to a method where they can actually have something to track maturity and continually update throughout the year through their HITRUST partnership, but ultimately help them get preferred rates on cyber insurance and better coverage. That we saw that as just like a perfect marriage. So
I think of trust but verification a lot, Sidney. I think I like the way you frame that. It's not simply a matter of knowing that we have relevant and appropriate controls in place, but that we have a level of transparency and integrity in the validation of those controls, and that, there's consistency. What would you leave the listener with, the final piece of advice, the final consideration that, people really need to think about as they think about their cyber insurance program and, opportunities to step into some of the concepts we've talked about today?
Maybe it won't sound as the most exciting piece, but what I really love about this is the idea of an opportunity to create some stability in the market, some consistency around this, right? We've got, a framework and a baseline that's going to create consistency in the way that we capture data, the way that we analyze and underwrite that data, and how that translates to our ability to sort of have cutting edge coverage and maintain that coverage, right? So we're confident in our clients. We're confident in the pricing that we give because we know what they're telling us is accurate and relevant. And so we've got this sort of efficiency play in creating that data that allows us downstream to make better decisions, more consistent decisions, and create that stability for clientele.
Josh, you hit on something I really want to echo, is this big need for customers to demonstrate a return on investment. They're going through these long, laborious processes for compliance purposes, but they also have to obtain insurance. So the ability to implement all these controls, evidence all these controls, maintain a very robust R2 certification, and then know that you're actually getting a return on your investment out in the insurance market. Ultimately, that has been very, very hard to kind of quantify and qualify in the insurance market. Whether you implement certain controls, how does that, reduce or affect my ability to get capacity or my premium? I think this is a clear-cut way to demonstrate that, and we're excited to be able to give back a little bit to the stakeholders that have worked so hard to implement all these controls.
I think what our hope really is, an effective process, effective coverage, and predictability. I think we lack predictability in the cyber market right now. I think Josh made a point around information share and data share that they'll use to keep consistency in this program, and I think that will speak volumes, I think, for what this program can look like, 5-10 years down the road as we continue to broaden it to other HITRUST clients and as we continue to grow together. So I think effectiveness, predictability, and then repeatability year over year. This is an annual review process. Currently, I think it becomes a little bit more of a living document, and that's what we're really excited about this program.
So I really like stability, a return on investment, predictability, and repeatability. Those sound like great attributes for people that are looking to manage their cybersecurity coverage on top of everything else that risk managers, CISOs, and corporate treasurers are dealing with every day. So, thanks to each of you for your time and for your participation. I'm really grateful. It's been fun.
Yeah, Jeremy, you promised at the beginning that this would make cyber insurance interesting, and I think the passion that Michael, Sidney, and Josh all bring to the problem is infectious. I mean, it's an industry that's transforming. We're so excited to be part of the transformation with them, and to hear leaders that are really thinking about this and how to make this effective is just really, really invigorating for me. What you said earlier about confidence, but repeatability, predictability, all those concepts, those are just really important things that I think customers are seeking in not only their security program, but I think insurers are seeking in terms of underwriting their customers' risk. And the fact that there are leaders like McGill and Trium that are working this problem alongside HITRUST is really exciting to me.
Yeah, good points, Robert. We consistently hear feedback from HITRUST customers, certified HITRUST entities, that the cybersecurity insurance application process is so very time consuming. So, for example, I went through this big HITRUST assessment. I worked with an assessor. I proved all these facts about my cybersecurity program, and I've demonstrated with confidence that it's in place. Now, my cybersecurity policy is coming up for renewal, and I've got a stack of very long questionnaires to answer from the broker. I answer it, even though a lot of the data is already in my HITRUST report. And then I've got to go potentially sit in front of dozens of underwriters and basically describe my cybersecurity program, answering so many of the same questions that have already been audited, proven, assessed, validated in my report. That's the same level of duplication that we're trying to avoid in the questionnaire space, in the third-party risk management space. So this whole time-consuming cycle of repeating yourself over and over and over again to different audiences, in this case for the cybersecurity insurance application process, this partnership that we've talked about in this interview, we're trying to eliminate that and actually focus on the value of a report with high confidence, it's been proven, and avoiding the need to do it again and again and again, while giving better data to the brokers and underwriters. So very cool, and we think that this is the start of something very good. So all that said, thanks for listening to Trust Versus, presented by HITRUST. Every episode, we challenge trust in discussions around the world of cybersecurity, compliance, assurance, and we hope you join us on this journey. Don't forget to rate, review, and subscribe us on your favorite podcast app or wherever you listen.
Thanks, everyone. Have a great day.